Hello, this is Indoshare's Mr. Create, Mr. N.
Mr. Connect.
Hey, first of all, Happy New Year.
Happy New Year to you all.
This is the Indoshare one-stop solution channel for your investment decision. We provide business model, market analysis, and quarterly report summary for you. We're basically doing your homework, and you can save your time for your investment decision. So what did we bring this week?
Yeah, for this week, we are introducing MTBC Inc.
P.
P.
What's P?
It's
Preferred stock?
preferred stock. Preferred stock.
Oh, before we go, I just want to show how MTBC work. So this is Dwight, a
The
doctor, and he's impression.
So what we can do is we can set up the portal for them. They can make their own appointments. The patients can see me clearly. I can see them clearly. And the actual medical record is right there so that I can annotate the.
Okay, so that's basically the demo of the MTBC EHR.
Yeah, EHR. Well, this is basically a healthcare IT company. It was founded by this gentleman, and it was incorporated in 1990 as Medical Transcription Billing Corp. And this is why it's called MTBC. And it's been listed to NASDAQ in 2014 at the price of $5 per share. One interesting fact about this company is that the company itself is acquiring a lot of companies as time goes by. As you can see in this slide, there are a lot of logos that were previously acquired by MTBC. And yeah, I guess, according to the 10K, there were like more than 20 companies that have been acquired. And before we go through the business segment, I think I need to emphasize what revenue cycle management is. It's basically a system that deals with the patient registration and the correct disease coding, which means whenever a doctor diagnoses a patient with a certain disease, he or she needs to define that disease using a code approved by the WHO or national health institutions. But it seems that the coding itself, coding a disease to a right coding is quite complicated. So the system helps doctors or nurses to use the right code. And
So basically, this is like the company where the doctors, when you think about the revenue wise, someone has to come in, someone has to think about what this is that he or she has, and then the billing service has to end for one cycle of entire revenue. So this is, I think, why they call it revenue cycle, because then the registration begins. It begins with registration, I guess. Then it goes to coding, what kind of sicknesses one person has, and then at the end of the day, basically billing is what's most important to any medical services.
So the matter here is that if a practitioner does not use the right code, he or she will not get the insurance collections or payments from the insurance company. So RCM system helps them do the right thing at the right moment. So there are two business segments for this company. One is healthcare IT. So as mentioned earlier, the revenue generated from the RCM services and also electronic health record or mobile health applications, they are aggregated as professional services. And the services, other services such as group purchasing or printing and mailing services, are all aggregated in this business segment. And recently, just last year, the company has commenced the telemedicine or telehealth function, so that the doctors does not have to patients do not have to pay and make a visit to a doctor's clinic during the times of the pandemic crisis. And second segment is called practice management. Basically, it's a system that helps to gather the accounting information or the revenue information for the practitioners, and also the system provides services like reminder services to patients so that that patient will not forget the doctor's appointment schedule. Yeah, so the company, of course, sell those the services, I mean products and services that I mentioned earlier. But one interesting fact is that they use, they leverage significant cost advantages by hiring skilled workforce in Pakistan and Sri Lanka. And yeah, right in the middle you'll see a poster that has been presented by the MTBC, that they are hiring software engineers in Pakistan. And yeah, the right hand side shows the office in Pakistan. And for this company, the market competitors are practice management, EHR, and RCM information solutions providers, and also larger healthcare IT companies such as the Greenail Health or Athena Health. Yeah, that'll be all for me.
Going into market analysis, before we dig into it, I want to check what to check for the market. So I break down the revenue sources. As Mr. N elaborated, most of the revenues are coming from RCM, 61%, and 15% from SaaS solution, and 12% from the practice management services. So what I wanted to focus was revenue weight over 10%, YOY incremental over 100%. And those professional services I highlighted because I feel that this is an indication of newcomers into the MTBC, since it's including training, implementation, data conversion, and migration. So I think this is an indication of newcomers. Others are, as mentioned, important for the revenue. So RCM services. North America shows continuous growth. I'm going to repeat over and over, but to grow this market is correlated to the healthcare in general. So in general, more people are interested in healthcare, care more attention to the healthcare. So the overall sector will go up as time goes by. This is the same graph. What is interesting is though, if you look at the right pie graph, you see the global RCM market is mostly in-house dominated, which means they are providing their own services within the company. But with MTBC and other companies, if they can provide the right services with proper amount of accessibility, they will increase the share of the outsource, which will then increase the market size of MTBC to play in. If you look into healthcare in general after COVID-19, you see a lot of graphs. What I want to focus was this black line, which is telemedicine, which spiked up right after the COVID-19 and up by 128%. At the same time, if you look into EHR and healthcare hospital, they're a little down, but they're coming up as time goes by. But traditional healthcare, like healthcare and hospital, is decreasing, of course, because of the quarantine and lockdown. Healthcare SaaS after COVID-19, as mentioned earlier, telemedicine spiked up 125%, which is quite interesting to see. And since MTBC launched mobile app last year, I think that was a very good time for them to do so. Rising software categories, of course, telemedicine, over 600%, which is wow factor. Looking into healthcare market, I think MTBC should be categorized under teleconsulting and telemonitoring, so which are the major portions of this pie graph, which is global telemedicine market. Good for them. Telehealth market, I'm going to repeat myself again. Healthcare, yes. Telehealth, yes. They are going to grow up. Practice management services, same thing. It's growing up to 2027, and I guess with help of MTBC, more doctors will have easier time managing their clients, setting up the appointments. So in the end, if MTBC focuses on its business model, they will have good time of growing opportunity into the future. And well, was actually my dividend rates. Since we are talking about the preferred stock, I took a liberty to show my asset classes. And now I manage about $9,000 in MTBCP. In monthly basis, about 0.9%. Annually, about 10.74% of dividends, paying monthly. The record close in month end, and they pay the dividend around 15th of every month. So you get to receive nice check every month.
Every month.
Yeah, this is a create. I'll be summarizing the third quarter quarterly report of the MTBC. The company's market capitalization is around $119 million, and what I wanted to focus is that 2020 third quarter revenue times the 4 times would be 88.8 million. No, like 12 months revenue of the third quarter revenue was $88.8 million, which makes it of PSR ratio at the 1.394 times, which is like the lowest number we've ever seen since we started our channel.
Mostly it was 20 or 30.
Yeah, it was very. But still, if you think about this company being $120 million worth of a company, this is a very small company. The stock movement, it started to go up a lot in 2020 because of a 2 acquisition that it has executed this year. If you look at the balance sheet wise, this company has a lot of cash, and one thing to notice is that it has a lot of intangible assets and goodwill. This is basically because of their previous acquisitions that they have executed in the past. So the total asset they have $137 million. If you think about this company has market capitalization 112, somehow this company has more asset in terms of the book value. Then of course you got to think about the equity portion of the total asset, but still it has a lot of asset. And in terms of the liability, it doesn't have that much of a liability. Obviously, banks wouldn't lend money to this company, because I'm not saying that this company is bad, but just that company being very small in its size, they don't have much of a debt. So mostly they issue preferred stock for any business operation or dividend payment or M&A acquisition. So if you look at the balance sheet, the equity portion, you can see that it has $102 million worth of equity. If you think about this company has the market capitalization, obviously common stock, $112 million. I mean, I think this is very fundamental stock. This is very cheap stock in that way. If you look at the income statement wise, this company has grown a lot in terms of revenue in 2020 third quarter. Because of 2 acquisitions that it has executed this year, as I said before, and this company is constantly making net loss for every quarter since its foundation. 2 acquisitions that they have executed this year was Ameridian Corporation. I read it somewhere that it was GE Health, and it was split off from the GE, and then now MTBC acquired the company at the price of $21 million, and CareCloud at $32 million. And as you can see, the composition of the total purchasing price, they have issued total of 22 million preferred stock this year for the acquisition of the company. And I'm pretty sure that the cash that they provide, almost the same amount. If you look at like 11.8 million, I don't know. I guess they have their own kind of calculation that they would use cash up to $11 million. But I'm pretty sure this is also the issuance from previous preferred stock. So if you look at the revenue and expense wise, the revenue growth for past 5 quarter has been in average of 20%. But during COVID-19, obviously revenue declined a lot because patients didn't make a visit to the clinics, and it affected their revenue. But now it's been normalized back to what it was pre-COVID-19 level. Revenue source is mainly coming from RCM, as we have mentioned, but the revenue growth I think has been attributed because of the acquisition of 2 companies, as I mentioned. I think one of the the interesting thing or interesting nature of this company is that they outsource their major portion of sort of I think back office sort of related cost. They have the 2,900 employees, but they're only like 10% of U.S. employees. So it's equivalent to like 290 employees in the United States. So if you think about 2,900 people making codes and whatnot, I think it will help them acquire new companies and then minimize the expense, increase the EBITDA into the future. So with reduced cost, further M&A I think is expected. 2020 third quarter adjusted EBITDA provided by the company was $4.2 million for just that quarter. So if you think about just annualize it with just times it by 4, it's $60 million. So if you compare it to market capitalization, it makes it 7.4 times of the market capitalization per EBITDA. So I think it's at the cheap level as long as we assume that revenue growth is as expected and the expenses keep going down. I think it's going to be a very cheap company. So expected 2020 revenue is $105 million with adjusted EBITDA of $12 million. So I'm pretty sure into the next year this company's revenue will grow as more further M&A is expected. As for the debt and equity funding status, they have no debt, as I mentioned. They have issued the $504 million share issues of the preferred stock at the dividend rate of 11%. And as of now, it's around like 10.39%. The preferred stock structure is cumulative redeemable perpetual structure. So what cumulative means is that if they missed out the certain 1 month's worth of, let's say, dividend, then they give it back to you in next month's. So basically, if you don't get the dividend payment this month, you get to expect that as long as the company has enough cash, they will give it back to you in the future. Redeemable means the company can always buy back the shares. So if you expect to make 11% this year for throughout the year, but somehow the company stopped issuing and redeem the stock, then you have to make another investment decision to replace the 11% return. With the proceed, they're paying dividend and M&A, as I've mentioned before. So one thing to notice is that when we are suggesting or when we are talking about the preferred stock investment, you got to think about the cash. This company has basically a quick ratio of $18 million, and they have to pay $16.8 million every year for preferred stock dividend. So I think that into the 2021, I think they have enough cash to pay dividend throughout next year. So I think this is a good investment decision. As for the risk, this company is constantly expanding through M&A, so there's risk and opportunity. So you get to make the decision. But one thing to notice is that this company has a structure that minimizes the expense of the company. So that's one thing. Preferred stock issuance is constantly increasing into the future. So it adds also the risk to the company in terms of their preferred stock dividend payment. So I think one thing that you should do is that you should be looking at 2021 each quarterly report to make sure that the M&A has been normalized. As for now, because they have done M&A, they brought like all the debt and asset from each other the company, and then they consolidated into one balance sheet. So as for now, they seems to have a lot of expenses and therefore they're making net losses. So you should actually pay more attention next year for normalization after M&A. So yeah, adjusted EBITDA for 2020 third quarter was $4.2 million as I've mentioned. But if the current level of the growth could be maintained, I think the common stock investment is also possible. So yeah. So analyst rating by the Wall Street Journal. If you look at the buy opinion, 3 months ago it was 2, then 1 month ago it was 5, and then current month is 7. So they're increasing their buy ratings because the common stock actually went from $13 to $9. So I think this is why they have more buy ratings. The average stock price target for MTBC common stock is $15.86 compared to its current price of $9.07. So I think that if you're willing to make a common stock investment, this is the rating. And what we can infer from the stock price target by Wall Street Journal is that I think it's to the stability of preferred stock dividend payment. Because if common stock is valued at $15, I mean, then it means I think that the preferred stock dividend payment has no issue. So that's it. So
That's it for today.
yeah, that's it for today. We thought that we should bring dividend stock for you because this is the beginning of the year and you might be thinking about planning for your portfolio. So maybe take the portion of your portfolio and invest in preferred stock for basically
Stable income,
dividend.
yeah.
Yeah. So if you're rich enough, like 1 million, if you own like 1 million, I think that $100,000 into the share is good enough for you for nice dividend payment.
Also, it's interesting to see the market had went down end of the year due
Yeah.
to profit realization. So adding a dividend portfolio into your asset, I think it adds a stability, and 11% is not easy to find in this market.
Yeah.
So why not take a little bit of your delicious pie into MTBCP and benefit from the stability that they provide with 11% dividend?
Yeah.
That was
So-
my take.
Yeah, that was his take. So yeah, thank you for your time, and please subscribe to our channel.
Yeah, and bye.
Happy New Year!
Happy New Year.
Always awkward endings.